Woo, woo. Welcome everyone back in to Crypto's News, here where we give you a tour on what's going on in cryptocurrency to make sure you stay informed. And on top of what is going on today, we had an interesting day because it was just down in cryptocurrency prices. And is the bleeding over? That is something we're going to be exploring, although it does look like it's continuing at the time of this video. So hopefully you're trading safely and you're staying, and you're maybe even buying the dip if there have been opportunities you're looking to do. Although it looks like the bears are out in full force and they have taken the narrative again, causing fear to become the predominant narrative for the crypto market. So welcome everybody back. I hope you are having a fantastic day. I invite you to hit the like button if you enjoy these videos, subscribe if you're new to the channel, so you can help us participate in relaunching the channel and hopefully getting back to the heights that we were at before at 120k subs. But man, was it a different time when I first started doing these YouTube videos. Crypto was just so small. No one was paying attention to it. Not average people, not governments, not nation states. We're in a completely different era right now. Although during bear markets, like everyone kind of forgets about crypto somewhat, just tries to move away from it for whatever reason, but it continues to be, again, one of the only lifeboats that we have. When you have more and more money being printed out there, trillions and trillions, that has to be printed in order to pay debt, to avoid some sort of credit freeze or lockdown of the system in general, to make sure bonds even have some sort of value. Money simply has to be printed, let alone was being issued to nations to help with wars, to help with medical crises and everything else. Some percentage of that is going to bleed over to assets that could be alternative investments or risky, safe investments, cryptocurrencies. And they have largely benefited, but I don't think to the degree that they will ultimately when the real value of these things is seen. And so really that's the play here, I think, is trying to have a seat at the table before others, especially during a bear market when they go into hibernation. A lot of people, they just don't care. But let's go ahead and take a look at what's going on. Hey, it was a long squeeze indeed at 10 pence. Pretty nasty. Thanks for showing up, 10 pence and Rob Groove. Good to have you guys here live. So let's take a look at TradingView as we start our day here. So we are in strong sell territory. I hadn't seen the technicals. So this takes a bunch of different different technical indicators to give us an overall look as to whether you could look at different assets on TradingView as a buy, strong buy, neutral sell, strong sell, and Bitcoin has dropped into the strong sell territory. It says so here. Crypto Fear Index hasn't updated just yet, but it looks like it's going to be doing that in about the next 2 hours, 31 minutes. It's still sitting at a 33, which is pretty close to yesterday's 30 level. I imagine it's going to be dropping probably very soon. But as it says here down below, it says that extreme fear can be a sign that investors are too worried. This could be a buying opportunity, the more fear that exists. Although, again, we're trying to understand the great macroeconomic landscape and where everything fits. You had a Fed president coming out yesterday and basically saying that a larger rate hike increase really is on the table here for September. I believe we're going to be getting some inflation prints on September 13th prior to the official meeting that's going to be taking place. But higher rate increases, I don't know if it's really going to matter that much, the difference between 50 basis point hike and a 75 basis point hike. But I think the market is trying to digest what's going on here. You had the S&P 500 down about 1% today, and crypto decided to wet the bed here and finally liquidate a massive amount of longs, as we'll be seeing. But yeah, when investors are getting too greedy, that means that the market is due for a correction. We had seen greed ticking up recently over the last period of time. I found this chart here by FX Professor on TradingView that I think showed us, however, that it's not a complete call for a crisis yet. We're not necessarily talking about Bitcoin $10,000 yet. We're not talking about Ethereum below 1450, which I was talking about in the last video as a major support level. We're in fact still in this kind of uptrend channel that we've been seeing for Bitcoin, which according to FX Professor, we are now seeing the third time, which is a crucial point here at support. So we don't want to see Bitcoin really close below this level for the next couple of days. I would say that could be a bit more bearish, and then ultimately we'll see support for Bitcoin at this psychological point of $20,000. And if we do break below $20,000, I think that would be a little bit, I guess, scarier for the shorter term trading here, especially considering, again, macroeconomics. Some are saying that really the stock market has a lot of a way down if things turn south, if inflation continues to creep higher and the Fed has to hike interest rates more and more, then that could put more pressure on risk assets, equities, and of course crypto wouldn't be safe. If like the S&P 500 dropped 50% from here, then you're going to have to imagine that crypto could probably take some sort of hit here. So we'll have to see. Personally, I've been following the narrative of Ethereum, right? I have personally been following the Ethereum the merge narrative as something that could be really good and has drug up the entire space with it. Of course, now there has been more FUD that I covered in the last video coming out. A lot more reasons for concern as well out of discussion. The Bitcoin maximalists out in full force talking about how this is creating a problem, right? Where you have exchanges now having outsized influence because they have more and more capital that is being staked on there. So they have more of a say on the networks. They have the ability to censor more transactions. And some of this is exactly the problem with proof of stake versus proof of work. So a lot of this coming out and discussion about this is causing some concern and really taking away from the merge narrative, pushing things up into the September 15th date that we're expecting for the great Ethereum merge to take place. And I think there is some validity to all of this. We don't want to see the exchanges have too much of, or any one centralized player or entity or group of entities have an outsized amount of influence. So this is something that's being talked about, discussions, forking, slashing some of these players so that they learn better. But we don't want to slash innocent folks here, retail, who may not have an option. They might not have had the ability to stake 32 ETH, to run their own validators, and went with something like the Coinbases out there. So this is something that's playing out and causing more uncertainty leading into the merge. Uncertainty, of course, technically as to whether it's going to be feasible. Although it does seem like it's going to be feasible since all the test nets are done, there are always going to be concerns, and you can't always test everything until it's out in the wild and on the main net. There was actually one test network that did not go so well today. You probably heard about Cardano, which was one of the ones that might have been leading the south side here with these markets. So you can see here Cardano was down today 13.1%. It was down more than the other cryptocurrencies as a testnet version of the Vasil upgrade seems to have failed and caused all sorts of problems, but it was about to be ready to be pushed to the main network. It was this close and it could have brought down the Cardano network and destroyed it. All kind of fun, I think, but this is the kind of, and I'm not a Cardano shill. In fact, I haven't even held Cardano, but it seems to have been overblown. And this is exactly what test networks are for. So you have Charles Hoskinson of Cardano out making videos, trying to fight back and push back against some of this fear, uncertainty, and doubt. But it goes to show the importance of test networks and being careful. But it's, of course, led others to saying, wow, Cardano, peer-reviewed. Wow, the peer review didn't help in this situation very much. But again, it wasn't something that impacted materially, except for, I guess, the price somewhat today of people's portfolios here. Just wanted to bring that up and remark on that, since we do like to cover most of what's going on so we can mark it for posterity here. And yes, these videos are still being uploaded to Odyssey. There's a separate YouTube channel that I have on Odyssey. It's not my main crypto channel. There's another one that I had created, which is syncing these videos on my newer channel as well to live forever on the Library blockchain. So yes, we are still documenting for all time, as we've done before on this channel. But we had a bloodbath today of, again, $500 million plus. It climbed actually over $600 million since this article was written 9 hours ago on Cointelegraph. But yeah, been a very bloody day. It was Bitcoin traders at the time losing over $203 million. Total liquidations, $551 million. That included Ether traders at $140 million in liquidations. Traders had been positioning themselves long. I think this was because of the ETH merge narrative as well. I saw a lot of Bitcoiners who had jumped ship and started talking more about Ethereum at this time because of what's going on. And arguably, there's not much happening for Bitcoin that's extremely exciting. It's really just following the macroeconomic atmosphere and hoping to be gold 2.0, where I guess the majority of investors park capital, or at the very least it preserves capital for those who have chosen to believe in Bitcoin, although it hasn't been safe, again, from the crashes. It hasn't necessarily been the best place to be. It's dropped more than other relative assets that could have protected you from some sort of crash, of course. So it's still, that's really the main narrative, is hoping that it becomes gold 2.0, although gold 1.0 isn't even becoming the best place to be right now. A very confusing time in the macro atmosphere, but that has led to the uncertainty being that narrative, and uncertainty tends to mean downside. So I saw this on Market Watch: hedge funds piling up $125 billion bet against the S&P 500's big summer rally. So you have positioning to the south side here from these traders growing a huge amount. And to me, that actually is a good thing. I mean, if they're positioning to expect shorts to be taking place here on CFTC futures, then I think the very opposite could happen. Usually you want to take the opposite of the majority trade, and it can just generally squeeze that way more violently against where most traders are positioning. So maybe this is something quite good that could be playing out for us. We'll have to see, of course, where that takes us. Arthur Hayes has some comments to give us in regards to this crash that we've seen recently, especially in regards to Ethereum versus Bitcoin. He said, ouchie, time to do some thinking. Are you trading a medium to long-term fundamental thesis? And this is the important part here, is, are you trading on a thesis, some sort of fundamental thesis, rather than just following, right? Reacting versus acting with your investments. Or are you trading short-term price action? The short-term price action is ugly. Assuming you are long, it could mean you read the market wrong. Is it time to cover, sit tight, or add more? That all depends on your nerve and how well you can read the chart. Oh, look, Renee Pop is buying the dip again. Nice, Renee. Thanks for your moves there. I always like to hear what everyone's doing, of course, as many as possible. Thanks, Renee, for being such a long-time supporter of the channel. In all sorts of areas, Twitter and elsewhere. And Kevin, what's up, Kevin? Good evening. I'm happy to hear that your video is performing well. He contributes by volunteering, Kevin, in Lakeland, Florida. I believe it's with buses like Greyhound, right? It was a while ago since I read that article, but nice to see volunteering and that you're getting recognized for that, Kevin. So moving on, if you are trading a fundamental thesis, has your thesis been invalidated by the price action? have any tenets of your thesis changed, which is the cause of the price action. Unless the price action is driven by a change in one of the tenets of your thesis, then the price action should be ignored. And depending on your capital position, it might be prudent to add more to your position, like Renee is talking about here. If you tell me the ETH merge ain't happening or something occurred which severely diminishes its probability of success, then I would be worried about my long position. I've heard the maximalists saying, hey, the Ethereum developers are being irresponsible by pushing forth the merge after we've been seeing with Tornado Cash and not going back to drawing board to figure out how to, at a protocol level, stop censorship from taking place. Now you're about to push forward proof of stake, giving these exchanges a huge amount of influence and basically allowing them to continue to censor because they have to bend over backwards for OFAC and to blacklist certain addresses and so on. Although, again, it was nice what we heard from Coinbase CEO Brian Armstrong saying that they would rather get out of the staking game completely in the event of some statewide level mass censorship taking place like this, rather than continuing to allow for staking to take place and have that censorship. So if something critical happened to decrease the probability of a successful merge, although that seems to be extremely unlikely, and we've officially gotten, again, a hard date of around September 15th. Really, it's a block number that we have to wait for. So the merge is pretty much happening. I would expect the ETH/BTC cross to fall much lower than 0.079, given it had advanced off a 0.05 local low in mid-June. That's when the crypto market hit its low. I believe that was June 17th. With that in mind, it might be time to go shopping. So Arthur is seemingly going to be buying the dip here. He has reiterated, which, again, you want to be buying you want to be buying things cheap generally. Not a recommendation to buy, as I always like to mention, because we don't know how much lower things could go, and you want to be betting funds that you need for rents or something else, right? FDIC, so Federal Deposit Insurance Corporation, they cover accounts that have US dollars back. Basically bank accounts. If you're a legit bank, then you have access to FDIC. So customers get, I believe it's $250,000 in the event that the bank goes insolvent and those funds are lost. But you have had crypto exchanges or crypto entities coming out claiming to be FDIC insured and to have those funds backed and insured on behalf of customers. The FDIC has issued 5 letters, including to FTX US, one of the largest exchanges out here now, or they've come out as one of the leading exchanges offering loans to some of the bankrupt companies that have come out. FTX providing that capital to help save and protect against further contagion. But yeah, FTX was one of the ones to receive a letter from the FDIC telling them to stop claiming that funds are protected. Others were cryptonews.com, cryptosec.com, smartasset.com, and FDIC Crypto.com. The letters were posted on the FDIC website. Basically tell them to stop their officers, directors, and employees to cease and desist from making false and misleading statements about FDIC Insurance Corporation and take immediate corrective action to address these things. So, for example, Brett Harrison was named here, who was the president of FTX US, who had been tweeting on his account, Brett_FTX, which said, direct deposits from employers to FTX US are stored in individually FDIC insured bank accounts in the user's names, and stocks are held in FDIC insured and SIPC insured brokerage accounts. This does seem to be misleading according to the FDIC. It said that these statements appear to contain false and misleading representations that uninsured products are insured by the FDIC. So this is just following, I think, what happened with Voyager. Voyager was one of the companies that's been having issues, went bankrupt, and is trying to get funds back to consumers. And they had claimed that funds were FDIC insured that were stored at Metropolitan Commercial Bank. But the FDIC did push back against that and publish warning against issuing such statements on the behalf without the right authorization. So it's just silly to me, right? I remember when crypto like back in 2016, it was against fighting these kinds of institutions, saying we don't need this kind of insurance. What we need is more education, teaching people how to manage private keys. It was very early on, right? We need to develop educational tools. We need to develop user interfaces that are better, user experiences that are better. But ultimately, this is not about tying ourselves to TradFi. It wasn't even called that back then, to traditional finance and asking for protection from the regulators and from the insurance corporations. No, this is about building something different that would be untethered to that. But how far we've come. We're now, they even just fraudulently put up that they're backed by the FDIC, some of these websites. Interesting. One of the ones that was named, which one was it? It was FDIC Crypto.com here that got one of these letters. That takes you over to this website, which I thought was kind of funny. What is this? CHS, service provider, Crypto Harris and his service provision. He made his own cryptocurrency, it looks like, or at least some sort of JPEG of one. CHS's service provider. They got a letter from the FDIC, seemingly. Easy transactional freedom, a more exclusive financial system. This looks like a straight up scam. Exponential industry growth. A more private transaction cryptocurrency, outsized return. So let's just offer everything that cryptocurrencies should feature. Portfolio diversification of cryptocurrency, blockchain technology of 24/7 market, a more exclusive financial system with crypto, eliminating poverty. Let's just do it all. Spelling licensing wrong. Also, this website that apparently got a letter from the FDIC. I don't know. This is where it redirects to anyway. They have a podcast. They have transportation services. So in Pennsylvania, Erie, Pennsylvania, you can get a one-way trips or even round trips to the airport or other places. Really, really strange. Anyway, that the FDIC took time to write these people a letter, but it's just quite silly. Anyway, Wu Blockchain noted this also in regards to some of the issues that are taking place, however, with the exchanges that are leading exchanges that are blocking access to certain services following the tornado mixing service that was blocked and sanctioned from the U.S. Department of Treasury. So Aztec Network has been working for layer 2 privacy for Ethereum, and it looks like recently FTX froze a user account who sent coins to Aztec Network's ZK Money. According to FTX Aztec Connect, Aztec Network / ZK Money has been identified as a mixing service, which is a high-risk activity prohibited by FTX. So more code that we're seeing that is potentially being blacklisted by more and more exchanges who are preemptively trying to avoid trouble with having to pay legal fees or whatever by stopping access to these services and blacklisting addresses that might have interacted with them. So even if they weren't directly named, like Tornado Cash, they're being blacklisted already. And I think that this is a very dangerous precedent to be setting, of course. And something that I'm watching right now, sharing with you guys, it's been to me so disappointing to see cryptocurrency go this direction away from like what I've seen with Hive. If you go to the Hive network, I talked about how it's more decentralized, how they use exchanging that is a little bit more private, or at least at the very least a little bit more open. I personally prefer to see decentralized finance, but at the same time you have these user interfaces at the front websites being censored. This is a far cry from the original ideas of seeing some sort of decentralized Web 3.0 with decentralized hosting services. It's just more and more, it looks like we're reaching some sort of climax here where we're further removed from the original ideals of Satoshi. You still have some of the original cypherpunks out there fighting for it, but there's such a vocal minority now here. And even then, they just get locked up and they get threatened with getting locked up, or they just get locked up without even the public finding out why, like with Tornado Cash. And it's become such a weird time, right, of censorship, self-censorship, and fear of publishing code, even anonymously, which, I don't know, it's moved away from where I originally thought crypto was going to go, and more into just how do we YOLO into money real quick. I don't know where it's heading, but it's definitely been somewhat disappointing to see it go that direction myself. Thank you so much, Matthew. Still, I'm out here and I continue to cover the news and hope for the better directions and encourage and inspire others to try to build in those ways, however I can, at the very least. And it's nice to have the support of people like yours, Matthew Sealer, to keep up the good fight and to at least show up, even though it doesn't seem as optimistic some of this in the directions as it once did. There are still some good fighters out there, and those supporting those views. Thanks a lot, Matthew. Bankrupt crypto lender Celsius now says it likely has enough cash to last through the end of the year. So as I talked about in the last video, it looks like Celsius might have only had enough money to make it to October. It looks like they've managed to raise enough funds to last them a little bit later on. Additional funds are coming from $61 million in loans made to crypto exchange Bitfinex that are maturing over the next few weeks, as well as roughly $20 million in savings on sales and use taxes on mining rigs that Celsius purchased. So it looks like they're selling some of those mining rigs. And so this will allow them to continue into 2023 when apparently Celsius expects to be cash flow positive, according to Chief Financial Officer Chris Ferraro. So I think the main way that they hope to become cash flow positive is using their mining operations. So if they're selling off mining rigs, I don't know how well that is going to work out for them. But I continue to hope, and it's nice that they won't be completely out of funds and insolvent come October, but they have bought more time to help creditors perhaps get some amount of money back as we go forward here. So just wanted to bring you an update there that we've just gotten from Celsius. This was posted on CoinDesk, so check that out if you want more information. And speaking of Bitfinex's parent company, iFinix, owns another product called Tether, which has been seen as very integral to crypto space, really the first majorly adopted stable coin. A lot of fears about Tether. What would happen if USDT, Tether, were to go down because they are insolvent? They lied about how much backing was behind each of these the reserves that were supposedly behind this Tether stablecoin. But Tether has released an independent audit, an attestation from a top 5 accounting firm called BDO Italia or BDO Global. They've come out and taken a look at what Tether has, and they're going to be doing that every single month. And they've looked at Tether and noted that Tether had indeed been lowering the amount of commercial paper that was backing. So this was a big drama, is that a lot of commercial paper was backing, not necessarily just cash, the Tether coins. And so Tether said that they were going to be dropping the amount of commercial paper, which is unsecured debt. It's similar to a bond, except it can be issued by a government, it can be issued by a corporation, and they tend to be shorter term securities that offer some sort of interest, right? But those are generally less than a year compared to bonds, which can usually be more than a year. So basically think about it like bonds, but unsecured and therefore a little bit riskier. And Tether said that they were going to be reducing the amount of commercial paper that they held backing this, and they have in fact done so with a 58% increase as of June 30th of the commercial paper from $20 billion worth to $8.5 billion worth. They want to be lowering that down to $200 million by the end of this month, so August 2022. And they want to be zero commercial paper before the end of the year. So instead, maybe we'll do something else to back them, like, I don't know, valuable Beanie Babies, NFTs. I don't know, Tether. We can use whatever we want to back these. But they have increased cash and bank deposits by 32%. Again, this is not this is Tether hiring their own independent auditor to do this. So I don't know how much we could take this at full value, but they have said that they're committed to more transparency. This is after the U.S. Attorney General case that took place, which said that they have to be more transparent. But it does seem, if this is to be believed, that Tether is moving in a more stable direction. They have been able to survive a lot of the issues that affected a lot of other platforms like Three Arrows Capital recently. So they're not the worst managed product out there. Just wanted to say that. And according to this assertion, their total assets amount to at least $66.4 billion, while their liabilities are less than that. So that's good to see, if this is to be believed. $66.2 billion in liabilities. So they're net positive there. Just wanted to bring that up since that just came out today. CME Group, I didn't get to do a video yesterday, but CME Group, Chicago Mercantile Exchange, one of the largest futures exchange, is going, or leading derivatives marketplaces, is announcing that they're planning to launch these big Ethereum options on September 12th, pending regulatory review. These new contracts are going to deliver one Ether future sized at 50 ethers per contract. So not for the average person to be trading, but you know, for the whale, and maybe some of you watching, you've been watching this show for a long time, maybe this is of interest to you, wanted to bring that up. And just more speculation, more for Wall Street to be playing this game, whatever. Gemini is going to be launching stake. They announced this as well yesterday, since I didn't cover it. One of the leading US exchanges is launching Gemini Staking. So this is an alternative to Gemini Earn. I'm sorry. So you can use Gemini Earn, but Gemini Earn uses other ways to generate yield for assets. For example, they said they partner with accredited and thoroughly vetted third-party borrowers like Genesis, who deliver yield to Gemini users generated through payment of interest on loaned assets. So this is kind of that really risky stuff. So everyone's been looking at Gemini like, is that Gemini Earn product as risky as what we saw happen with Celsius, BlockFi, some of these concerns that have been taking place around them, and people possibly losing access to all those funds? So Gemini has offered a safer alternative, which is based off actual staking, proof of stake consensus mechanisms on some of these platforms. So they're launching it firstly with Matic on the Polygon network, and coming up will be Ethereum, Solana, Polkadot, and Audius, the audio token. Never heard of that one, but there you go. Support will be launched soon, and this will be available to users across the US, except in New York. It's also going to be available in Singapore and Hong Kong, and you can learn more on Gemini. I think what's really cool, and others are noting as a really nice feature, is that they have slashing protection. So Gemini will reimburse you for certain penalties imposed in connection with staking, such as slashing penalties. So if Gemini screws up and they have slashing penalties, they are going to be covering that on behalf of your accounts, they say here. And they do have some of the best security out there. I haven't seen them have any sort of major hacker issues, and they're one of the more trusted ones in the United States here. So good to see an alternative to Gemini Earn, which I said might be a little bit sketchier to be using based on some of the stuff that we've seen. It's better to be preemptive rather than lose money, but you should be safer definitely with Gemini Staking. Also wanted to say, I noticed this on Reddit. So if you go over to Reddit and you have had an account for some time, they're giving away free NFTs right now. You should see a banner if you go to the desktop, although I'm hearing from others that they're finding it on mobile as well. If you click on that banner, it'll let you generate one of 4 different NFT types, like the Singularity ones, which are robots, or these meme team ones. Mine is pretty ugly. I'm not going to be selling it, of course. I don't know what value any of these are going to have, but if you want to claim your NFT, then go ahead and get over to reddit.com. Mine says, if the internet could vomit, the meme team is what would come up. I had to go with this one. Beautiful in their hideousness, these creatures are an amalgamation of all the stupid and awesome things the internet has to offer. I've got this sad-looking Earth in the sky, pie in the sky up there. I got this brawny looking cat on the right. I don't even know what this is in the center. Certainly some vomit looking creature. And this happy-go-lucky little horse on the bottom left. That's probably my favorite part of this. But yeah, cool. I can make it my avatar now on Reddit, as Reddit continues to embrace the blockchain and Ethereum and everything else. Also, homework, I guess, if you guys want to see something else, I'm going to be doing this, checking out this video, probably in just a little bit here, by the Terra founder, Dokwan. They were at the center of this huge collapse with their stable coin that wasn't supposed to lose its peg, and so many, including Raul Pal of Real Vision, said it's a 20% guaranteed yield. Basically, there's nothing safer out there than Terra Luna. Looks like it was not the case. This implosion is kind of what began the cascade of liquidations from Three Arrows Capital that affected other parties in this place, many other parties. And at the center of it was Dokwan, who is free, apparently, to give interviews from his house, as we can see here, with coinage. You can check out this interview. The second part is now on YouTube, which is why I bring it out. It originally came out 3 days ago, 41,000 views. That's so small. You can tell how we're in a in a bear market, pretty much. When you look at the amount of views that these videos are getting, this is one of the most anticipated interviews in recent times from the horse's mouth as to how he saw it from his position on his throne. So I think there were a lot of hard-hitting questions I had seen from the teaser trailer, although I haven't seen part one. I'm going to check it out. Part two is now out. So if you want to check something else out, this could be a great video to watch after this one that you're watching right now. So I hope you guys have enjoyed the video. Oh, thanks Validator ETH for making it out. Appreciate you, man. And anyone else who watched the video, supports via Patreon, PayPal. Thanks, Matthew, for that. I haven't been making really much anything off of these videos, really what I make on Hive. So thanks to the Hive community, for 3Speak for their support recently, and those who do enjoy the channel and wanted to continue going. I noticed that, and I sincerely appreciate it from the bottom of my heart. Much love to all of you guys. Take care. Much love, and till next time. Oh, have a great weekend. And we're on Friday. We survived another week. And in this macro atmosphere, that's not something we can take for granted. So blessings to all of you. Stay cryptic, everyone. Peace.